Laurence Balanco of CLSA has written a very interesting note, and this time around it's for the emerging markets that he's talking about. Laurence Balanco, of course, a CMT technical analyst, a global technical analyst as far as CLSA team is concerned, is well known for his views as far as emerging markets, developed market, gold, some of the other markets like India, which he tracks particularly quite closely. So what he's saying is that the EM trade has established since the US presidential election, which means that emerging markets, MSCI EM, which they particularly track, is something which is done quite well. They believe for 2021, that's the best case asset class to actually own, or going into that, there has been a 10 to 12 year underperformance as far as emerging markets are concerned, and that is starting to reverse, and that makes them believe, or looking at the chart patterns, the way the price action has been, it makes them believe that things are looking on the positive side as far as emerging markets go. So they advise their clients for 2021, the key trade as far as markets are concerned is emerging markets. Now they're not saying that one has to go short on the developed markets, but emerging markets for years, for almost a decade now, has been underperforming the developed market as far as a basket as a whole is concerned, and that, according to them, can actually change. Now, particularly, they have written about various markets, but India, of course, which is Nifty, that they track quite closely, that is something which they believe can outperform. So what they're firstly saying is that in Nifty, there was an up move that was started in the month of September. This up move was, of course, a up move continuation of the March lows, or the March or the April lows that Nifty had actually hit. So that is where this up move essentially came in from. They believe that initial targets for this up move was 14,000 to 14,100. That, according to them, is something which should be achieved in the near term. After that, there could be some sort of correction, but they maintain that their positive stance on India continues. Their long-term targets are 18,000. In the near term, the momentum is quite strong, and 14,000, 14,100 cannot be ruled out. Also, talking about emerging markets as a whole, they believe that going into December now, the flows may slow down, but then in Jan and Feb, or Q1 of next year, because they follow our international calendar year, so Q1 of next year is when you can see better flows going ahead as far as emerging markets are concerned. So that, they believe, is something which will take the markets higher. But somewhere between the Q1 or probably towards early part of Q2, markets could top off, but that could be a near-term top. And when the top happens, or a correction happens from that level, they believe it's a buying opportunity. Why? Because they believe it's a multi-year bull run as far as emerging markets are concerned, and that's why they continue to say that corrections which could be on the course of 21 towards probably the first half or the second half is something which would be a buying opportunity. Just to reiterate, for Nifty, they believe that 14,100, 14,000 could be a near-term stop, could be a near-term target. This is a move which has started in September, but long-term bullish stance on Nifty continues. 18,000 is the target that they have in the long run, and they believe that it can be achieved in this emerging market bull cycle. For 2021, emerging markets is among the best place. 14,000, 14,100 near-term target for Nifty. Of course, long-term targets being close to 18.